assignment begin. Yeah.
Yes. Good afternoon, everyone. Welcome to Recall and Revise Marathon session for CA Inter Paper 8, Part B, Financial Management subject. I'm Hemnath. I'm a CA final student. I'm very happy to host this session. I'm delighted to welcome CA Hariharan sir, who will be taking today's marathon session, which will provide the approach towards the exam for the students. And I welcome all the students who will be getting utmost benefit out of this session. And students can post their questions in YouTube live chat box. We will take up all the questions at the end of session, at the end of like 10 minutes before the end of the session. We will try to answer all the questions. And sir, I want to inform you that this session will end up by 5:45 or 5:50 maximum, as they have planned another session after that, sir. And I would like to introduce Hariharan sir for the benefit of our students. Sir is a fellow member of ICAI. We will call it as FCA, and Bharatidasan University topper. He is a gold medalist. Sir have received Chief Minister Award for Excellence in Studies at university level. He is a founder of Hariharan and Associate Chartered Accountant firm. Sir authored more than 20 books. He have trained more than 50,000 students. He is a motivational speaker, and he is also a trainer for various MNCs. And sir have been a faculty for ICAI and various colleges and government organization institutions. And the achievements which have gained my attention very much is sir have handled more than 38 hours continuous classes. That is a very much unique thing. I would like to hear some brief about that, sir. And I will hand over it to you, sir.
Thank you, Gana. Thank you for the nice introduction. Good evening, my dear students. Hope you are preparing for CA examination. Countable dates only available. Yeah, Nitya, good evening. Aida, good evening, welcome. Asif, good evening, welcome, Pranav. Today's session is about financial management paper. How we have to approach the FM part. What are the difficulties are facing our CA students in examination? Where and all chances of committing mistakes are there in the financial management? All those things we are going to discuss in detail. This paper consists of FM and economics for finance. Weightage for the financial management is 60 marks and 40 marks for economics for finance. During your preparation, what are all the areas you should be thorough? Being a professional examination, you know, we are not afford to take any chapter as a choice topic. We can't predict from this topic, question won't come just because it came in the previous examination. So don't do this type of mistake during the preparation time. We're all professional students. Your approach should be in the professional manner. First, make sure to cover 100% of the syllabus and refer ICAI syllabus properly. Don't learn the syllabus in the examination hall by way of seeing the question paper. This is what happening from the many students. They are getting surprised by way of seeing the peculiar question in the examination hall. But if you are going to see, those questions are already available in the ICAI material or RTP or MTP. So without referring your source document, our institute materials, don't call for the examination. First, you should be thorough with respect to syllabus. For coming examination, what are all the areas you should be thorough? A category item for your preparation. For A category item in financial management, highly important area for coming this November examination. For first one, working capital management. Undoubtedly, working capital is important for every attempt. This attempt also equally important. Cost of capital, capital structure, also called capital structure theory, capital budgeting, risk analysis in capital budgeting. These are all comes under A category for coming examination. I'll repeat once again: working capital, cost of capital, capital structure, capital budgeting, risk analysis in capital budgeting. B category items, source of finance, the FM theory part, scopes and objectives of financial management, that is basic concepts, including lease finance theory part. This and all comes under B category. And C category item, leverage analysis, ratio analysis, and dividend policy, we can consider for this examination. Leave for C category item. Whether A category item or B category item or C category item, coverage of syllabus is must for you. Don't skip any area. But you have to give more focus on A category item, so that chances of clearing the examination paper will be high. Now, in detail, whether A or B or C, what and all you have to refer, that we are going to discuss. The first one, working capital management. Basic concept we can take. The basic concept, the first topic, also called scope and objectives of financial management. There, what you have to cover, very few questions only available, but keep on, they're asking one question from that particular topic. Less number of pages, but more weightage for the exam. So don't skip the theory at any cost, because financial management, full and full concept-based paper. You can get the concept purely by way of learning the theory part. So you should be thorough with respect to theory. Learn the theory, based on theory, try to understand the question. Mere by way of solving the problem, mere by way of what being practical problem, you won't get any grip at all. So you have to be thorough with respect to conceptual based understanding is important. For that, read the theory properly. In basic concept, the important theories are basic aspects of financial management. You know what are all the basic aspects of financial management? One is procurement of fund, another one is effective utilization of fund, called basic aspects of financial management. So basic aspects you should be thorough. For your kind information, if you are going to see institute material, that question also called functions of financial management. Once they ask the functions of financial management, many students not even touch the question, because they know the answer for basic aspects of financial management, but they didn't know the functions of financial management. For the kind information, basic aspects of financial management is also called functions of financial management. So try to understand what is the question, what are all the alternative names. That is also equally important, because 5 more questions many students lost because they don't know the alternative name for the question. Characteristics of source of fund, that is also frequently asked, 3 more questions. You know, 3 characters are there: risk, cost, and control. So between own fund and borrowed fund, where we are going to get more risk, more cost, and which one we can be the person to control properly. That is called characteristics of risk, cost, and control. Next important question, objectives of financial management. You know the objectives. One is profit maximization, another one is wealth maximization. Wealth maximization is more important than profit maximization because profit maximization is a short-term object, wealth is a long-term object. Profit maximization is the must concept, whereas wealth maximization is the best one. Therefore, wealth maximization is more important than profit maximization. The same question, different manner they're asking. One is objectives of financial management. Another way, difference between profit maximization and wealth maximization. Sometimes they ask argument in favor of profit maximization, argument against profit maximization, argument in favor of wealth maximization, arguments against wealth maximization. Nothing but advantage and disadvantages of profit and wealth maximization. 3 marks to 5 marks expected question. Here commonly committed mistakes are, whenever they are asking objectives of question, students are addressing aspects of financial management. Aspects also, 2 aspects are there. Objectives also, 2 objectives are there. That's why keep on, they're getting confusion between aspects as well as objectives. So please be thorough. Aspects represent procurement of fund and effective utilization of fund, whereas objectives of financial management represent profit maximization and wealth maximization. Then you have to remember the important question, 5 roles of CFO's roles, 5 roles of CFO. There also students used to commit the mistake. Whatever they can able to remember, because examination whether want or don't want, you have to remember the points. Number of points also equally important. Whenever you are writing the theoretical part, better to write in the bullet format. Point-wise presentation is advisable. For that, day before examination, what and all you have to prepare. During the 1 day before examination, one examination or other exam, what and all you have to remember. For that, you should have separate notes, or you have to underline the important areas, so that the highlighted part alone you have to refer 1 day before the examination. For that, during the preparation time itself, you have to put some sufficient effort. If you are going to put the effort properly during the preparation time, then considerably you can be the person to enjoy the revision part properly. So this is the time for you to do the revision. It's a revision time for you. So you have to recollect all the points. Where and all possible, especially with respect to theory part, where and all possible, you can create your own chart. Chart-wise presentation is advisable, so that you can be the person to recollect the point easily, or in examination also you can score the points easily. So how we have to prepare the chart-wise? Because in institute material, all the theory they may not the person to give it in the chart-wise presentation or bullet point presentation. You have to create your own chart. For that, your involvement is important. So whenever you are going to study with a full concentration, try to understand the points, try to develop your own answer. There is no necessary for you to write as it is what is there in the ICAI material. Try to digest what are all that information available. Thereafter, you can develop the point on your own. So, theory part also equally important. How to present the theory, that is more important. Presentation part plays a vital role. How we can be the person to create the theory or present the theory? For example, even if you are going to take the first question, basic aspects of financial management, better you can convert into chart format. There are 2 basic aspects are there in the financial management. The two basic aspects that we can convert into what? Chart format. One is procurement of fund, another one is effective utilization of fund. Procurement of fund, they are given either by way of own fund or by way of loan fund, nothing but borrowed fund. Either by way of own fund or borrowed fund. Under own fund, either by way of equity share capital or by way of preference share capital. Borrowed fund, either by way of long-term loan or by way of debentures. So if you are going to create the chart-wise presentation, it may be help you for the purpose of better revision. Quickly can be the book to complete. Effective utilization also, what all the points are there. You can write in the bullet format. We have to use the fund properly and profitably. Just read the ICAI material, what all the points are there, that you have to park it in the respective place. Why you have to use the fund properly, profitably? Because procurement is itself involves some cost. So we have to use the fund proper as well as profitable manner. Procurement is itself involves some cost. Nobody is going to give the fund at free of cost. So in this juncture, how I have to utilize the fund? I have to use it in the proper and profitable manner. Before I am going to touch the fund, I have to do cost benefit analysis. How much the cost of the fund? How much the benefit out of the fund I have to analyze. Cost benefit analysis I have to do. And I have to verify if there is idle fund or unutilized fund if any, excess fund if any. How I have to make use of the excess fund, that I have to analyze. Who has to take care of all the fund properly? Finance manager is responsible for making use of the fund properly. So, the 2-page, whatever the theory available in the study material, you can convert it to one chart itself. One hand, I am classifying the basic aspects in 2 parts. Here itself, you can know also called functions of financial management. Therefore, easy for you to do the revision. Classification chart-wise presentation is also there. What and all not possible to create chart-wise. Bullet point presentation is also there. So that within less time, you can be the person to do the revision. Day before examination, you don't have the time to read line by line. It's a painful activity. Just you can browse page by page. It is going to convert everything into what? Easily presentable manner. Bird's eye view. You can be the person to complete your revision properly. Ultimately, day before examination, how fast you are going to complete the entire paper, that matters a lot. That gives you the confidence. Even if you are going to take, what are the 5 major roles of CFO? First, before you are going to start any business, we need a plan. Planning process important. After planning process over, I have decided what type of business I have to do. Then I have to mobilize the fund. Okay, Durga, we have to mobilize the fund. We need a fund for the same. So we have to worry about source of fund. That source of fund, I have to utilize in the proper manner. I have decided what type of business I want to do. Planning process over. In that planning process, nature of business, where I have to do the business, how much of fund I need. Clear? So all those analysis I have to do. After that, I have to decide how to get the fund for the purpose of completing the or starting the project. That is called the source of fund. Then, by way of own fund, by way of borrowed fund, I got the fund. Thereafter, I have to utilize the fund in the proper manner. How I have to utilize? I have to utilize in long term as well as short term. If I am going to invest in short term, then it is called working capital. If I am going to invest in long term, that is called investment decision, also called capital budgeting. So whatever the fund I have procured, I have to invest. One hand I have to invest in short term. Another hand I have to invest in long term. The short term investment is called what? Working capital management. Long term investment is called capital budgeting, also called investment decision. Okay, planning process over. I started the business by way of getting the fund. I invested the fund in long term as well as short term. Then what next I have to do? Will the business will go always smoothly? Definitely not. Always you have to face risk factor. If you are going to do the business, risk always will be there. How I have to manage the risk? That is called the risk management. We should know how to manage the risk. So it's purely by way of what, if you want to do the business, any person wanted to do the business, they have to do the planning, thereafter source of fund, working capital management, capital management, and risk management. So you can be the person to create by way of what? Funny diagram. So, like on doll, planning process is a head, source of fund is a body, one hand working capital management, another hand capital budgeting decision. We are under the risk. So, if you are going to create this type of funny diagram, you can be able to remember, you may not forget all the 5 points. Because in examination, all the points are important for the examination. 5 major roles, immediately anyone can tell by way of seeing the diagram itself. So these are all the manner, creative manner. Your involvement is important at the time of reading the study material, reading the theory. At least kindly go through the important theories, past exam theories, so that you can capable to clear the examination. So your side effort is important to clear the exam. Then, what are all the 9 emerging issues which affects them? Future roles of CFO. That is also a famous question. So, you have to remember all the 9 points. For that, you can create mnemonic also. GSTRN, GST return, GSTRN. G, S, 2S will be there. T, 3T will be there. R, 3 R's will be there. So, GSTR, GST return. So, if you can remember that, you can remember all the 9 points. Clear? So, globalization, technology, development, all the points you can convert into mnemonic. So, where and all possibly can create the mnemonics, where and all possibly can create the chart, where and all possibly can create the diagram, and where and all possibly you can create the bullet points. Your side, you have some notes. The best notebook in the world is your own handwritten notebook. Any person's for that matter. So, because in examination you can be the person to recollect all the points, what and all you have written in your notebook only. Therefore, maintain your notebook properly. Take proper notes. Then, the difference between financial accounting and financial management. What is the difference between financial accounting and financial management? That is also equally important question. So, what are all the past exam question analysis supposed to be there in your hand? Based on that, you have to prepare for the examination. Then, the next important topic in A category, working capital management. You know very well the importance of the working capital. What and all you have to cover in the working capital. What are all the areas you have to study. Then, with respect to working capital, because how many problems you are going to solve is not important. In professional examination, how many varieties of the problem you have learned, you have solved, that is important. So, quantity of the problem is not important. Quality of the problem is important. Every type, at least you have to solve one problem. and all the concept is supposed to be thorough. For that purpose, working capital, what are all the areas you have to concentrate? First one is the definition of the working capital will be that current asset minus current liability is equal to working capital, excess of current asset over current liability. What is called the current asset? What is called the current liability? Classification of working capital based on the concept and based on the time. Based on concept, it may be gross working capital or net working capital. Based on the time, it may be permanent working capital and temporary working capital. That and all for knowledge purpose. Examination purpose, what is important that you have to identify. In that, the next page onwards, we are getting the examination approach in the study material called working capital cycle. So you should be thorough with working capital cycle. The reason, direct theory question also 5 more question possible for working capital cycle, as well as practical question also possible based on working capital cycle. You know what is called working capital cycle? So side by side, kindly take a note. We are in working capital. The first area I have to remember is what? Working capital cycle. Hope Shiva, Babu, Hariharan, Janani, Saravanan, Shreyas, all of them taking notes also, right? Parallelly. Now, working capital cycle. What is called working capital cycle? Time duration required for which conversion of cash into cash equivalent, thereafter back into cash, are known as working capital cycle. I'll repeat once again. Time duration required for which conversion of cash into cash equivalent, thereafter back into cash, are known as working capital cycle. Always remember alternative names also, because I say playing your life based on what? Playing with your life based on the alternative names. Working capital cycle is also called cash cycle, also called operating cycle, also called budget cycle, also called business cycle. I'll repeat once again. Working capital cycle, operating cycle, cash cycle, budget cycle, business cycle. This is with respect to what? Working capital cycle. Here you have to remember the segments in working capital cycle. There are 4 segments with respect to working capital cycle. One is lead time, L-E-A-D, lead time. You would have studied lead time in costing paper itself. Time gap between date of order and the date of receipt of goods is called lead time. Second one, process or production cycle. Third one, stock holding period. And last one, average collection period. This is called what? Segment with respect to working capital cycle. Even working capital cycle also, because the theoretically it's important one. You can create by way of chart so that easily can be the question to remember. With a great difficulty, I'm going to procure the cash. Because there are 2 basic aspects are there. One is called the procurement of fund, another one is called the effective utilization of fund. You know, either by way of own fund or by way of borrowed fund, we can procure the fund. With a great difficulty, we procure the cash. The procured cash, what I have to do? I have to invest. I have to do the business. Further, I have to invest. Effective utilization. If I'm going to invest the same, where I have to invest? If I'm going to invest in long term, then it is called capital budgeting. Investment decision. If I'm going to invest in short term, then it is called working capital. We are in working capital management. Therefore, we have to invest in what? Short term. So, cash, I am going to invest in raw material. Nothing but I am going to purchase the raw material. Procured cash. I have to invest in, I want to purchase, so-called cash is now called raw material. Then, what I have to do with the raw material? The raw material I am going to convert into WA, work in progress. Then the work in progress is going to become finished goods. I am going to convert the raw material into finished goods. The finished goods I am going to convert into what? I am going to sell, therefore I am going to get data. From data I am going to get what? Cash. what I'm going to do with the cash? Again, I'm going to invest in raw material. Raw material to WAP. WAP, it's one cycle. No? That's why it's called what? Working capital cycle, operating cycle, cash cycle, budget cycle. Clear? Therefore, the number of cycle more means I'll get more inflow, more profit. Number of cycles in a year less means less inflow. Whereas the duration of the cycle should be less. Working capital cycle days should be less. Whereas the number of cycles should be more. The days are less, then only number of cycles will get increased. That only beneficial for the company. Now, I am having cash. I want to purchase raw material. Immediately it's possible for me to purchase the raw material. So I have to wait for some considerable time. The sense what? I have to find the supplier. Even after placing an order, delivery time will be there. The gap, time gap between cash and the raw material, that is called lead time. That time gap is called lead time. L-E-A-D, lead time. I am having raw material now. That raw material I am going to convert into fully finished product. It requires some time to conversion of raw material into finished goods. That is called process cycle, also called production cycle. The delay is called process or production cycle. Then finished goods is that I have produced the product. Then till the customer is going to buy the product, I have to keep the material in the good condition. Therefore, I have to keep it in a good and properly. I am holding the stock in a good condition. That's why it's called one stock holding period. I am holding the stock. That's why it's called, the period is called stock holding period. Then I have sold the product, debtor has come. Always cash and carry basis is not possible. Clear? Then I have to collect the cash from the debtor. That time gap is called average collection period. Clear? So the lead time, process or production cycle, stock holding period, and average collection periods are called what? Segments in operating cycle. Dear student, hope it is visible for you. Am I right? Yes or no, Saravana? Shreya, Bharati Bhaskaran, Asif. Now, next we have to move forward. So if you are going to create this type of diagram, you won't forget at all. Clear? The next one is what? Formula for the operating cycle also you have to remember. With respect to practical problem, formula is useful. In theory also you have to write the formula. Operating cycle represent raw material plus WAP plus finished goods plus debtor minus creditor. Okay? So that to everything in terms of what we have to express in terms of days. Operating cycle we have to express in terms of days. But theoretical part over, sir. Easy 5 mark you can score. What is called operating cycle, what is the segment for the operating cycle, diagram for the operating cycle, formula for the operating cycle, number of operating cycle you have to express in terms of days, number of operating cycle expressed in terms of times or cycle, more the number of cycle is best one, operating cycle days should be less, all the point you will write. So 5 mark granted. In examination, computation of operating cycle comes into picture. But with respect to computation of operating cycle, you know, raw material plus WAP plus finished goods plus debtor minus creditor is equal to operating cycle. No. In this juncture, those things we have to express in terms of days. Raw material holding period is how much? 40 days. WAP holding period 30 days. 40 plus 30. You have to compute by way of number of days. But if you're going to see in the examination, this type of easy problem they won't ask. They will give the financial statement itself. You know what is called the financial statement. Everything in rupees, it's available. Clear will be there in the rupees. So raw material, labor, everything in terms of what? Amount, balance sheet. It's a part of the current asset, current debit, it's a part of the balance sheet only. You know. There will be the financial statement balance sheet. By way of balance sheet, by way of this financial statement, we have to compute operating cycle. That's a challenging one. I'll repeat. Operating cycle in terms of days you have to mention, but available data on this question in rupees. Can anyone tell how to convert the days into rupees? So rupees into days. Because available information rupees only, you can text and tell. Understood the question or not? Clear? So available information in the question paper is what? In rupees. But requirement in set of days. Because all those things will worry only in examination part. Right or not? After seeing the question, how to convert them. Very good, Bharati. Your answer is correct. For that, we have to apply what? Turnover ratio. So you force remember the turnover ratios formula also. Then only can be the question that attend the operating cycle questions. Then only can compute operating cycle. So we have to identify the turnover. We have to find out the turnover ratio first. So what are the formulas for the turnover ratio? Yes, Aida, Nityasri, very good. Keep it up. Shreya, correct answer. Yes. Dani, Bagida, correct answer. So we have to apply the turnover ratio. So with respect to turnover ratio, what's the formula for turnover ratio? At remember. For raw material, because all the elements we need a turnover ratio. Am I right or not? So raw material we need it, WAP we need it, finished goods, data, everything we need one, that time lag period turnover ratio. So with respect to raw material, how to identify the turnover ratio for the raw material? Raw material consumption divided by average stock of raw material you have to apply. So first you have to remember the turnover ratio. Before the ratio, when turnover ratio is applicable, because in question paper they won't give the clue. They'll give clue. The requirement only with respect to what? Compute operating cycle alone will be there. So you have to identify, since operating cycles are mentioned, we have to mention in terms of days. Available data only in rupees. So to convert the rupees into days, we need a turnover ratio. All the concepts supposed to have. Thereafter also you have to remember the formula. Formula with respect to raw material turnover ratio is raw material consumption divided by average stock of raw material. Problem is not the ends now. Raw material consumption represent what you have to remember. What is the raw material consumption? How to identify what plus what minus what is equal to raw material consumption? What plus what minus what is equal to raw material consumption? Asif Ali, we are responding for all unwanted things. You can respond for us. No. What plus what minus what is equal to raw material consumption? Any idea? Yes. Opening stock of raw material plus purchase of raw material less closing stock is equal to what? Raw material consumption. Remember the cost sheet, same cost sheet format only as per the costing only. Clear? Opening stock of raw material plus purchase made during the year less closing stock is equal to raw material consumption. That's the numerator. Denominator, average stock of raw material. Average, simple average. Opening stock plus closing stock divided by 2 is equal to average stock of raw material. Similar, suppose mere stock column is available. There is no opening and closing detail. Then whatever the stock available, that stock we have to consider as the what? Closing stock. For the purpose of that stock, we have to consider as what? Average stock. Clear? Next one. The next important thing is what? WAP, turnover ratio for the WAP. For that, cost of production divided by average stock of WAP you have to take. Same on finished goods. Cost of goods sold divided by average stock of finished goods. It's a turnover ratio. Debtors, credit sales divided by average debtors. So you have to be careful. Sales will be there. Somewhere they will give how much percentage credit or what is the cash sales. You have to consider only credit sales alone here. Similarly, creditors, credit purchase divided by average creditors. So that you can identify the turnover ratio. Based on turnover ratio, we have to convert the turnover ratio into rupees. The turnover ratio into what? Days. How to convert the turnover ratio into days? With respect to operating cycle days, 365 divided by turnover ratio is equal to, you can get the days. Always remember, the entire financial management is what the problem student used to face. 1 year is equal to 365. Majority of the problem used to consider 360 also. Only in exam, the special peculiarity of the study student is all the doubt will come only in the exam hall. All along they will be happy. In exam all along, they'll get what? N number of doubts. Here, 1 year is equal to 365 or 360 days. That confusion will come. Because in classroom and all, many questions we have solved by way of year consists of 360 days. But remember one thing, in exam, the question in this question, year, not number of days is not mentioned for the year. So you have to take 365 only. Only if the specific information is there, year consists of 360 days, then only have to take what? 360. Else, 365 days only have to take. Clear? It's not only for the working capital, entire or FM as a whole you have to consider. So this is with regard to operating cycle. So we are in financial management. In that, what are all the important areas you have to concentrate? That is what you are teaching. That is what you are learning now. First one is operating cycle. How to compute operating cycle you have learned. The next one, estimation of working capital. The next important segment is one, estimation of working capital. With respect to estimation of working capital, how many methods are that to compute? How many ways are that to compute estimation of working capital? Any idea? You are in revision stage only, no? What are the ways are that to estimate the working capital? Hari, respond. Durga, respond. What are all the ways are there? Because once they ask a direct theory question, explain various ways to estimate the working capital. Yes, IDA, 2. What are all the 2? That's what I want. Elizabeth, tell me. 2, okay. What are all the 2? Yes, Bhaskaran, tell me what are they. I'm asking what are all the 2s? 2, okay. 2 methods are there. What are all the 2? Yes. So, exam also, many of them go to the same mistake. There are 2 ways are that to estimate working capital. Okay, Nityashree. One is total approach, another one is cash cost approach. But, yes, IDA's answer is correct. Refer study material properly. Method 1 and method 2. 2 methods are there. In method 1, 2 approaches are there. In method 2, 2 approaches. Totally 4 methods you have to write to get the full mark. Not mere total approach and the cash cost approach alone. Clear? In method 1, one is by way of operating cycle or by way of estimation of each and every component of current asset and current liability. Method 2, by way of total approach, another one is by way of cash cost approach. So totally how many parts are there? 4 different ways to estimate the working capital. Clear? All the methods, practical problems are there. Refer our instrument material. How to compute, how to estimate the working capital by way of operating cycle. How to estimate the working capital by way of each and every component of current asset and the current liabilities comparison. How to estimate the working capital by way of total approach, and how to estimate the working capital by way of cash cost approach. In each and every method, practical problems are there. For examination point of view, cash cost approach, this time cash cost approach is more important for your preparation. Dear students, in general, in examination, they ask you to prepare working capital, but the question will be silent. Whether we have to solve the problem by way of total approach or cash cost approach, they won't specify. In this juncture, the problem is silent. Then how to select the method, that is important. Because all along we are solving the problem. In examination hall, the doubts will come whether we have to solve it by way of total approach or cash cost approach. So without knowing the concept, without knowing how to choose the method, if you are going to solve the problem, instead of total approach, you are going to solve by way of cash cost approach or vice versa. The answer is correct, but that is not the requirement of the question, means you won't get any mark at all. So how to select the method? For that, in that question, depreciation element and profit elements are there in this question. Okay, depreciation and profit elements are given in this question. Then we have to solve the problem by way of, better to solve the problem by way of cash cost approach. Nityashree Gondarajan's answer is correct. Good, keep it up. Okay, so if it is given by way of one, depreciation and element, depreciation and profit elements are there, then better to solve it by way of cash cost approach. If it is not given, then we have to solve it by way of total approach. So these are all the tricks you supposed to have before solving the problem. So I'll repeat, we are in working capital management. What are all the areas to be remembered? That is what we are discussing for the coming exam, November examination. First one is an operating cycle. Second one, estimation of working capital. Third important, float management you have to refer. It's the theoretical part only, float management. Float represent what? Delay. What are all the delays are there? What are all the various types of floats are there? That you have to remember. Any idea about types of floats? Totally how many floats are there? There are 6 types of floats are there. One is called billing float. Second one is mailing float. Third one is credit period. Next one is again mailing float. Next, check processing float. Last one is bank processing float. Clear? These are the various types of floats are there. 6 types of floats. Yes, Bharati, correct answer. Good, Kanna. 6 types of floats. And many students, whenever they are studying, sir, here also mailing floats is there, here also mailing floats is there. It's a printing error, sir. Therefore, totally 5 methods, 5 floats. This mailing float is different. This next mailing float is different. Now, float nothing but delay. Delay in what? Delay in the transaction. Float is. But that float management, what you have to do, ultimately you want to reduce the delay. That is important. How to reduce the delay? That we have to analyze. Billing flow, we have to reduce by way of faster, instant billing. Okay, by way of what? Instant billing we can do. What is called instant billing? Without billing, we can't supposed to transfer the product. It's called billing. What? Instant billing. Second one is mailing float. Mailing nothing but postal delay. How to reduce the mailing float? By way of faster and economic mode of transmission, like fax, email, or WhatsApp. Faster and economic way of transmission. Credit period, we can reduce by way of discount, cash discount. We can be the person to give, reduce by way of cash discount. Remaining float, remaining billing, mailing float, check processing float, bank processing floats. That and all we can reduce by way of concentration banking and lockbox system. Concentration banking and lockbox system. These are all the various ways are there. Mere reading the float, remembering the float alone is not important. Yeah, mere remembering the float alone is not important. We have to remember, we have to identify what all the ways are there to reduce the float. That is also equally important. Good participation, keep it up. Clear? Now, the concentration banking, lockbox system, that and all, current trend, it's an outdated one. But in spite of that, it is there in the input material. For the purpose of 5 marks, you have to refer. Then, the next important concept is cash management. With respect to cash management, you have to remember the cash management model. What do you mean by cash management? Minimum amount of cash required at any given point of time is called cash, optimum cash. That is called optimum cash. There are 2 ways or there 2 methods are there with respect to cash management. That is called cash management model. One is called J. Baumol's model. Another one is called Miller-Orr cash management model. J. Baumol's model is based on uniform cash flow, whereas Miller-Orr cash management model is based on uneven cash flow. For your examination, J. Baumol's model, from Baumol's model, you'll get practical problem. The Baumol's model is purely based on what? Economic ordering only, EOQ based problem. Similar to EOQ only, similar type of what? Formula only. Or Miller-Orr cash management model, direct theory question may possible. Okay, so short notes on Miller-Orr cash management model, or advantages with respect to what? Assumption with respect to Miller-Orr. This type of question may come in the examination. Then you have to remember the next segment in working capital is credit granting decision. Whether we have to grant credit or not, that is called credit granting decision. In the sense what? Whether I can be the person to go by way of cash sales or credit sales. That is called credit granting decision. If I'm going to grant credit, what will happen? For that purpose, we have to do cost benefit analysis. If I'm going to grant credit, one hand I am getting benefit, another hand I have to incur a cost also. What are the benefit for the same? If I'm going to grant credit, the benefit is I can be in the position to increase my turnover. More customer will come. Accordingly, I can get more profits. That's the advantage with respect to what? Granting credit, credit sales. Whereas next one is what? Cost also you have to see. If I'm going to grant credit, the cost of the company is, one is chances of incurring bad debts will be there. So that I have to mentally have to prepare, I have to incur it, I have to bear the loss. Another one is what? Opportunity cost, interest element. If you are going to pay the cash and carry basis, then there is no risk at all for me. There is no concept of opportunity cost. But today you are purchasing the product, Bharati is buying the product, 1 lakh worth of the product, and the 40 days credit period, she is going to pay on or before 40th day. So I have invested 1 lakh rupees worth of the product I have produced, I have transferred the product to Bharati. She is paying 40th day only. Till 40 days, I don't have the money. I want to produce the product. Then I may have to depend on bank only. Because 40th day only, Bharati we are going to give back my money, settle the amount. In this juncture, 40 days overdraft facility by way of OD or bank loan, I have to pay interest. That interest component for the 40 days is called what? Opportunity cost. So here we are discussing only one benefit. What are the one benefit? Incremental profit. Whereas two costs. One is risk of bad debts, another one is what? Opportunity cost. So benefit minus cost 1 and cost 2. Profit minus bad debts minus opportunity cost. Net benefit is positive, means we can grant the credit. If it is not profitable, then we can reject. In examination, more than one option will be there. Current situation, they want to increase the credit period. Current situation 40 days, they want to increase. So 40 days becomes 60 days, 75 days, 85 days, 105 days. They'll give some various what? Credit period increment. Out of which policy is preferable, whether 40 is preferable, 60 is preferable, 75 is preferable, 85 is preferable, or 105 is preferable, you have to identify. Then we have to do the same cost to benefit analysis. Where we are going to get maximum benefits, that option is preferable. Suppose in 60 days credit period, net benefit is high, then better to grant 60 days credit. That is called one cost to benefit analysis with respect to credit granting decision. Here one important thing you have to remember for credit granting decision. One is fixed cost component. In general, fixed costs remain constant. In general, fixed costs remain constant. If the fixed costs remain constant, then for the purpose of benefit, we have to consider contribution alone. Sales minus variable cost is equal to contribution, minus fixed cost is equal to profit. Since fixed costs remain constant irrespective of the option, you no need to consider the fixed cost because fixed costs become irrelevant cost for decision making. Therefore, for the purpose of cost to benefit analysis, here benefit represent contribution is itself benefit for you. Sales minus variable cost, contribution itself benefit. You can stop up to contribution. But sometime, even the past exam question, changes in fixed cost given in this question. Fixed cost for the current situation 3 lakhs. 60 days credit period, 70 days credit, 75 days credit period, 85 days credit period. Thereafter it may increase. Then up to one particular point out of fixed cost constant, thereafter incremental fixed cost is also there. Then contribution is not the benefit. Contribution minus respective fixed cost, the profit is a benefit for you. Where you are going to get more profit, that benefit you have to take. Thereafter you have to compare with the other cost element also. The impact will be there in opportunity cost. In opportunity cost also, we cannot the person to take it from the debtors angle. Cost of the debtors angle you have to take. If the fixed cost remain constant, mean debtors into variable cost ratio is equal to cost of the debtor. You don't need to consider the profit element. You don't need to consider the what? Fixed cost element also. But the fixed cost also varies. Then proportionately I have to take. Debtor is based on sales angle. Then total cost how much? Total cost of person, variable cost into fixed cost. Proportionately I have to take. That concept is called the one credit granting decision. So in credit granting decision, two ways are that approach. One is fixed cost remain constant. Another one, fixed cost also varies. Accordingly, we have to do the treatment. Next important segment in working capital is MPBF. What is MPBF stands for? Maximum permissible bank finance. Maximum permissible bank finance. In the sense, how much the bank can be in the position to grant for the purpose of loan, for the purpose of working capital is called MPBF. Working capital loan is called MPBF. For the computational question, may important for the exam. Various three methods are there for the purpose of computation of MPBF. One is method 1, another one is method 2, another one is method 3. The methods based on Tandon Committee's recommendation. Based on Tandon Committee. Based on Tandon Committee, as per the method 1, MPBF is equal to 75% of current asset minus current liability. MPBF is equal to 75% of current asset minus current liability. Nothing but 70% of working capital. In method 2, MPBF is equal to 75% of current assets minus current liability. In the sense what? Current asset into 75% minus entire current liability ought to take. In method 3, 75% of fluctuating current asset minus current liability. What is called the fluctuating current asset? Total current asset minus core current asset is equal to fluctuating current asset. Dear students, core current asset will be there in the question paper itself. Clear? Therefore, take the total current asset less core current asset, what is there in the question paper, balance is equal to called fluctuating current asset, out of which I have to apply the 70% less entire current liability. Balance is equal to MPBF loan. Many occasions they are asking MPBS with current ratio. Current ratio for current situation as well as method 1, method 2, method 3 of MPBF they are asking. In that circumstance, we have to identify respective place current ratio, respective methods current ratio. Because in current situation, current ratio, current asset divided by current liability represent what is there in the balance sheet, current asset and current liability. But in method 1, we have completed MPBF. Assume the banker has granted the MPBF. Whatever the MPBF answer has come, that loan has been granted to the company. The loan has given, then current asset cash balance going to get increased. So current asset will increase by reduction of MPBS amount. Same manner, denominator current liability also going to get increased because of MPBF itself short-term loan. Therefore, for part of current liability. Therefore, whatever the MPBF you got in method 1 or method 2 or method 3, numerator also will come the same amount, denominator also will come the same amount in addition to current asset and current liability. Accordingly, revised current ratio you have to compute. Clear? The next important point here is factoring. Next important concept is factoring. Factoring, expected practical question for the exam, and theory also equivalently important. You know the concept behind factoring. With respect to factoring, we have to compute factoring, how to express in terms of percentage only. And the computation of factoring is based on debtor. Don't take the entire credit side. It's a commonly committed mistake from the student side. The moment that they come across factoring, they'll take factoring amount, computation of factoring based on entire credit sales. That's not the correct one. We have to take it from out of his debtor amount you have to compute. Based on debtor only, factoring is applicable. Now, there the another twist with respect to computation of debtor itself. Credit sales will be there. All the credit sales may not be the debtor. Thereafter, you have to apply average collection period. Based on average collection period itself, the average collection period only, debtor amount will come. Thereafter only you have to compute factoring. Further, you need one average collection period. How to compute the same? The twist in the examination is credit sale, assume sales revenue is there. Sales is given, for example, 100 lakhs. Out of which credit sales comes to 80%. Then credit sales revenue comes to 80 lakhs. Cash sales to credit sales 80:20 ratio means credit sales comes to 80 lakhs. In the credit sales, this is for the 1 year period. Nothing but P&L account. First year to 31st March. We need one in the credit sales. We have to derive debtor amount. Debtor represent as on 31st March. The balance sheet amount is called debtor. All the credit sales may not be the debtor because few of them paid the amount also during the period. But you have paid the amount. In this juncture, credit sales into average collection period is equal to debtor. Based on debtor only, factoring concept lies. So the factoring lies in the debtor. With respect to average collection period, nowadays they are having twist. They are giving some twist. The concept of 2/10 net to 40, 2/5 or 2/10 net to 60. That concept they are giving. The beginning of the period they asked one, directly average collection period was given. Average collection given, for example, 60 days is the average collection period. Then debtor how to identify? 80 lakhs is for, assume 360 days in a year. Out of it, 6 days is equal to how much the debtor. This is what the computation we used to prepare. Am I right? Suppose that 60 days itself not given in this question. We have to compute them. How to identify the 60 days? For that purpose, they'll give the clue by way of what? 2/10 net 40. Suppose they are giving 2/10, net 40. Based on this terminology, we have to prepare factoring concept. We have to compute the factoring. In this juncture, because of this term, many people are not aware. 2/10 net 40. The 10 to the numbers and all irrelevant. Okay, it may be 3/15 net 60 also. Numbers may change. Clear? For example, only taking 2/10 net 40. What do you mean by 2/10 net 40 represent first? Here, 40 represent credit period. We know what is called a credit period. I have told Bharati Bhaskar is purchasing the product from me. 1 lakh rupees worth of product. After 60 days, on or before 40th day, she has to pay me. Then net to 40. Net 40 represents what? The credit period. But I have to wait. As a seller, I have to wait 40 days. Then only I can collect the money from the customer. In this juncture, I need money no, for the purpose of improve my liquidity. I am giving. If I am going to reduce the credit period instead of 40, if I am going to put 20, then my customer is going to get the product from my competitor. Because competitor may going to give instead of 40, 50 days credit period also to attract the customer. In this juncture, I may not be in a position to change my credit period. But to get the money from the customer, I can go by way of this particular term called 2/10 net 40. 40 days credit period is there. Yes, Vagila, the answer is correct. Yes. 40 days credit period is there. But if you are going to settle the money within 10 days, then I'll give discount to the extent of 2%. So I'm attracting the customer. Settle within 10 days. You don't need to wait for up to 40 days. If you're going to settle well in advance, I'll pay 2% commission. So 2% discount. Then few customer may going to attract by way of what discount. Anyway, I have to settle the money. Clear? If I'm going to on or before 40th day, anyway, I have to settle the money. If I'm going to settle now itself or on or before 10th day, then I will get discount of 2%. No, therefore few customer may reduce it.
Sir will be joining in few minutes. Students, please wait. Can you unmute yourself, sir? In the
Is it audible now?
yes, sir. It's audible. Yes.
Is it okay now? Students, is audible? Shall I continue? Am I audible? Bharati, Nityasri, Vahida. Is it audible, Kana? Asif? Hemant? Why no response?
Yes, sir. You can continue, sir.
Okay, now?
Yes, sir. You can continue, sir. It's clear now. Yes.
Students, shall we start?
Yes, sir.
We stopped in MPBF, am I right? So MPBF with the current ratio you have to study. Next important concept is factoring. With respect to factoring, working on it. Okay, I'll take it. Thank you. So the next one is factoring is an important concept. So we have discussed about one, how to identify the factoring that too at the time of what? Average collection period computation. Clear? Based on average collection period only, we have to identify debtors. Based on debtors only, concept of factoring arises, computation of factoring arises. Am I right? Then the next important concept is double shift. How to handle the double shift. Clear? Whenever double shift arises, how to do the computation of working capital based on double shift. Importance of the double shift is audible, no? Importance of the double shift for raw material, double the normal requirement of quantity unit because of the double shift. WIP it remains same, whether single shift or double shift. Quantum of we need a double. Debtor may also going to become double, and the creditors also going to become double. Whereas cost per unit may going to change, going to reduce because of more quantum of production and more sales. Even selling price also chances are that to reduce. So based on the impact on working capital due to double shift, computation of working capital based on double shift also we have to identify. So these are all the important things you have to remember with respect to working capital. Then safety margin computation based on what that we have to identify carefully. 20% safety margin mean 20% on working capital, whatever you have computed, or 20% inclusive of the working capital, whatever you have computed. Accordingly, you have to compute. Accordingly, you have to adopt the safety margin computation also. So, working capital management, what are all the areas you have to remember? Operating cycle, theory as well as practical problem. Then, estimation of working capital, various methods, float management, cash management, credit granting decision, MPBF, factoring, double shift. These are the important concepts for this particular examination. Next, we can move to leverage analysis. With respect to leverage analysis, what and all you have to refer for leverage analysis? One is DOL, DFL, DCL, degree of operating leverage, degree of financial leverage, and a degree of combined leverage you have to identify. In addition to the leverage analysis, you have to go for that identify income statement. Based on that, reverse working problems also will be there, income statement, and concept of analysis. You know what is called trading on equity.
The video is moving slow, sir. Your audio is fine, but video is moving very slow.
Okay. Anything I have to do from my end? Not to do.
Am I audible, sir?
Hello. Zoom la theriyudhu.
Yes, sir. It is visible, but video is little slow.
Then shall I continue? No. Students, shall I continue with this?
So only audio is clear, but video is little slow.
Continue or what? can hear the audio.
Yes, audio we can hear, sir. Or else can I ask ICAI to arrange some another session for half an hour or 1 hour if it's required? Can I ask to arrange some another session for half an hour or 1 hour if it's required?
சொல்லுங்க. When Kanu? Yeah. Remaining thing, can I give the text கொடுத்துக்கோங்களா? என்ன பண்ணலாம்? Okay. I think it's visible now, but check பண்ணு. Students, am I audible Kanna? Yeah. Kindly check it up in YouTube, not in Zoom. Okay. Students kindly respond, then only I can understand whether it's all. This is a told concept for coming examination. Next important first working question on investment. On what? Income statement. You have to prepare the profitable statements. Variable cost equal to contribution minus fixed cost. EBIT less interest is equal to ET. Less tax is equal to EAT. Income statement you have to prepare. That too they will give based on what? Leverages. That is what? Or DOL or DFL. Answer will be there by way of reverse working after computer. Then cost of capital. With respect to cost of capital, the important elements in the cost of capital are: first, cost of debt fund compute. You have to compute debt fund. Second one, cost of equity fund, cost of preference share fund. Then what? Retain cost of retaining and overall cost of capital. So I'll repeat once again: cost of debt fund, preference share fund, equity share fund, overall cost of the company. Now, with respect to debt fund, there are two elements are there. One is redeemable, another one is irredeemable. They won't specify the problem is based on or identify. Of redemption is given in this question, then we have to solve the problem by way of redeemable. If redemption is not given, then we have to solve it by way of irredeemable one. Based on anything applying for preference share capital also. Cost of, because of debt cost preference shares, we have to use the formula. Formula is going to vary depending upon redeemable or irredeemable. This time, with respect to cost of equity, CAPM model is important. Capital sizing model, that is equal to RF plus beta into RM minus RF. That formula you have to use. Retain earning. With respect to retain earning, Bhagida is telling voice also not clear now. Yeah.
Sir, I spoke with ma'am also. If you want, you can also send the revision text. We can share with the students. We will post the email ID. They can request the text by email.
Okay.
Yes, sir.
Then give the important points in the text itself so that they can share the information to the students.
Yes, sir. Yes, sir.
That will be better, am I right? Because students now daily voice also not clear.
Yes, sir. Yes, sir.
Okay. Dear students, apologies for the network issue. What are the areas you have to cover? I will text it and give it to our SIRC. Then the details to you what all the areas you have to study for the coming examination. If you have any further doubt also, you can be put the text or mail to ICAI. I will respond at the earliest. Thank you for the given opportunity. Again, sorry for the inconvenience to you. Thank you, Hemant.
Thank you, sir. Email ID also I will share. ICAI. I will share the students. Email ID I will share with the students. Students can request for text by mail. We will send the text through mail itself, sir. In the live chat, I am sending the email ID. The email ID is sikasa@icai.in. I have shared in the live text also in the YouTube. Students can request the revision text through the mail. We will be try to send the revision text through the mail itself. Thank you, students. Thank you, sir. Sir, now actually it's clear, very clear.
Now it's clear.
Yes, sir. Video, audio, both are clear.
Oh. And then I'm finishing it. What to do?
We have 15 more minutes. Okay. If you want, you can continue.
If there is any question answer, they can.
Question from
they have in the question. Students, am I audible? Visible?
Yes, sir. Very clear, sir.
If you have any doubt, you can ask now. Yes, audible. Okay. Now, cost of capital also then will continue. Leverage analysis, I quickly once again I'll repeat. We have to do the computation on DOL, DFL, DCL. Reverse working based on income statement. On another one is important is trading on equity. This is referred to leverage analysis. Next, cost of capital with respect to cost of debt fund, cost of shares, cost of equity shares, cost of retaining, and overall cost of capital. So, whether redeemable or irredeemable with respect to debt fund or debt fund and what preference share fund they won't give. The year of redemption is there being redeemable, else it is called irredeemable one. Then with respect to K, CAPM method is important. What is CAPM? Capital asset pricing model is important. RF plus to RM minus RF. That formula you have to use. Then weighted average cost of capital. There market value method computation is important. You know, there are two ways that to compute weighted average. One is book value method, another one is market value method. So this time market value or combination of book value and market value are important. Then YTM method you have to refer, yield to maturity method based on IRR concept. Yield to maturity, based on yield to maturity you have to compute. Cost of debenture you have to compute. So year of redemption will be there. After applying time value of money, you have to compute yield to maturity method. Here two important elements are coupon rate will be there, flotation there. This question student used to get the confusion between coupon rate and flotation cost. Is interest into 100 minus tax rate out to take, because interest are with respect to interest we are having tax benefits. Flotation cost nothing but expenses. You know, issue price minus what flotation cost is equal to NP, net profits of issue. So these are all the important segment you have to refer with respect to cost of capital. Capital structure, capital structure. The important element in capital structures are, first one is selection of capital structure. Capital structure is the best one that you have to select. The selection criteria is based on ROE, return on equity, and earning per share. Clear? On the availability of the info, we have to set capital structure. ROE and EP. Is equal to earning. So if to compute earning per share, you need number of equity shares. If number of equity shares not given in this question, then only you have to select based on ROE, return on equity. Formula for return on equity is earning the equity shareholders, equity share capital. So I'll repeat once again. If the number of share detail is not available, not possible to identify, then only you have to go by way of return on equity. Yes, interest relation on slab rate computation will be there. Then tax rate 10 lakhs. Interest rate is what? What is the interest rate? 10 lakhs. This type of slab rate based interest computation is be thorough. Indifference point you have to be thorough. Clear? So how to compute value of the firm, value of the debt plus value of equity is value of the firm. Value of firm computation also equally important in capital structure. The next one is capital budgeting. With respect to capital budgeting, project evaluation technique should be thorough. Simple payback, payback reciprocal, ARR, discounted payback, net present value, profit index. Another one is what? Internal IRR, internal rate of return. So here two projects may be given. Which project is best you have to identify. Further, you have to remember the formula for all the project evaluation technique. IRR is important for the examination. For ARR, the commonly committed mistake is average profit after tax you have to take. But many occasions, CFAT will be there given in this question. Whenever CFAT is there, you have to adjust depreciation. After adjusting depreciation only, you can get what? Average profit after tax. So in this question, whether CFAT is there or profit after tax is there, you have to verify. Accordingly only, you have to solve the problem. For ARR, more than one formula available. Even ICAI material also 4 to 5 different formulas are there. All the formula for each and every formula is different answer. All the formulas are correct formula only. Clear answers are correct answer only. In general, the commonly used formula is average profit after tax divided by net initial investment into 100 is the formula for ARR. Net initial investment represents initial investment is salvage value. Salvage value, with respect to salvage value, at the end of the period, salvage value given in this question means what the treatment. At the beginning of the period given means what the treatment that you have to identify. The salvage value at the beginning of the period means you have to adjust with the initial investment. Initial investment minus salvage value is equal to net initial investment. Whereas salvage value you are getting at end of the period, end of the year after the project. As in 5th year end we are getting. Then 5th year end it's an inflow for us. For that also time value of money applicable. Then life disparity based problem is important. Whenever life disparity arises, we have to solve the problem by way of equivalent annual cash flow method. With respect to equivalent annual cash flow, income approach is there, expenditure approach is there. With respect to income means whichever is higher, which between the project. With respect to expenditure, purchasing of machinery, which machine we have to buy. It's an expenditure based one. Whichever is lower concept you have to take based on equivalent annual cash flow. Mute yourself. Next, when you have to apply the discount factor, when you have to apply the annuity factor, is supposed to apply. Whenever you come to uniform cash flow, you have to apply the annuity factor. Annuity factor you have to apply only in case of uniform cash flow. In case of uneven cash flow, you have to solve it by way of discount factor, PV factor only. Time value of money, how to understand. Time value of money computation as well as theory is important for the coming examination. Received today is not equal to worth of rupee to be received in future is called the time value of money. That concept is important. Capital rationing based problem, where I have to invest the fund. If the available fund is less means how to invest the fund. That capital rationing problem is important. For that purpose, project can be classified into two. One is divisible project, another one is indivisible project. In case of divisible project, the selection criteria are based on net present profitability index. In case of indivisible project, we have to select based on net present value. According to the rank, we have to invest the money. The type of capital rationing problem is important. Then government grants, if any, that we have to adjust with the initial investment. That type of problem also you have to refer in case of capital budgeting. Clear? Then ratio analysis. With respect to ratio analysis, all the assumptions is important before you are going to start ratio analysis. The opening stock is not given in the question means closing stock itself is itself what? Average stock computation. The opening debtor is not given in this question means closing debtor is itself what? Average debtor. This type of assumption is supposed to have. Then this time P&L account with the balance sheet based problem, reverse working problem is important for examination. Then implied required rate of equity, return on implied required return on equity. That type of problem, the formula is also important for the examination. Capital block represent what you have to have. Capital block represent total capital employed is called the capital block. Then interpretation also is supposed to have. All those things available in the institute material itself. Equity represent what, net worth represent what, proprietary fund represent what, capital employed represent what, all those things you have to have. Then risk analysis in capital budgeting, expected net present value, variance, standard deviation, coefficient. Combined manner, you can get the problem. That too, single period as well as multiple period you have to compare. Clear? So in case of single period, how to apply. In case of multiple period, how we have to derive. That type of problem you have to remember. Risk-free and risk-adjusted discount rates. Chances are there, but very remote. Certainty equivalent component techniques also, we can consider as a C category in risk analysis. Whereas sensitivity analysis is important for the examination. That too, adjustment factor, adverse impact, okay, based on that you have to solve the problem. And NPV becomes zero means which one is more sensitive, whether initial investment or net present value, that type of problem. That is not there form part of the input material main problem. It's there in the exercise problem or some illustrative problem. That type of problem also important for the examination. Scenario analysis also important. Then dividend decision, the last segment is called dividend decision. Relevant theory and irrelevant theory is important. In Walter's model, reverse working question is important for the exam. Then dividend payout ratio, dividend yield based, dividend yield formula is important. Traditional approach and linter model is also important. Traditional and linter model least important, whereas is most important. Reverse working segments you have to remember with respect to financial management. So then theory questions also you have to remember. So I have covered with respect to one AB's analysis of the topic, basic concept what and all important, working capital management, cost of capital, capital ratio analysis, leverage analysis, risk analysis in capital budgeting. I have covered in addition to that theory part of remember. So I have covered the entire syllabus. Hope it was useful for examination. It is useful for your examination preparation. If you have any doubt also, you can ask now.
Thank you so much, sir. We will be ending the session by 5:50 as we have announced earlier. Thanks for the wonderful session, sir. This will be very useful for the students. Yeah, this will give approach towards the exam, and they will feel more confidence on your guidance, sir. Thank you so much. You can share the notes also with us. We will try to give it to the students. Thank you so much, sir. Can we wind up this session, sir? Thank you, sir.
Bye. Thank you for the opportunity.
Bye, sir.